Let me give it to you straight, because the media won't, your bank won't, and our federal government sure as hell won't. If you're waiting for rate cuts to save your mortgage, your budget, or your real estate investments, keep waiting. Because the Bank of Canada just got sucker punched by the two worst possible words in economics: stubborn inflation. Here's what the July Edge report laid out, plain as day. Inflation is not going away quietly. Core inflation, the kind that matters to the Bank of Canada, remains elevated around 3.4%. Shelter inflation, still the number one contributor to CPI. And service inflation, which is sticky and hard to tame, both still hot. Translation, don't expect the Bank of Canada to blink. They're not cutting rates while inflation is flirting with the upper target band like a drunken Tinder date. Now let's talk about what really killed your rate cut fantasy. Jobs. StatsCan just reported a net gain of 48,000 jobs last month. That's not a cooling labor market, that's a hiring boom. Now, albeit most are part-time. And for Tiff Macklin and the Bank of Canada, that's a nightmare. Strong employment means wage growth stays high, workers keep spending, demand remains sticky, which means inflation remains sticky. It's like trying to diet while living in a bakery. And let's not forget, strong jobs data equals no urgency for cuts, which means rates stay high, which means homeowners suffer. Let's drill into the impact on real estate. Here's a couple of examples. The renewal horror show. I had a client in Vaughan, a 5-year fixed from 2020 at 189 maturing. She's now looking at 449 on a renewal. Monthly payment, up $1,182. Her exact words, do I renew or do I sell? Example 2, investors in retreat. A seasoned duplex investor in Scarborough just told me, I'm cash flow negative for the first time in 20 years. Why? HELOC tied to prime, rents capped by the landlord-tenant board rules, and no relief in sight. And the third one, which is a first-time buyer paralysis, couple earning $170K a year in Hamilton, pre-approved in January for $750. Now, same profile, only qualifies for $625 maximum. They didn't buy, they're waiting, but the clock on that rate hold is ticking. The follow-up goes beyond mortgages. Small businesses are freezing hiring. It's too expensive to expand. Builders are delaying starts. The financing costs are killing margins. Consumers are spending less. Retail sales are flatlining. Housing starts fell 7% in June, and permits are at 2016 levels. This is how high-rate environment quietly strangles growth. It doesn't scream. It suffocates. Here's why you can forget that September rate cut fantasy. Headline inflation may cool, but core inflation hasn't. Wage growth is still running hot. The US Fed is holding firm. If we cut and they don't, the loonie tanks, and imports into Canada get pricier. The Bank of Canada is terrified of cutting too soon. They did that in the 70s, and inflation came roaring back like a Marvel sequel no one asked for. The July Edge report sums it up perfectly. There is no evidence of recession in the data. Translation, pain must continue. This isn't fear-mongering, it's clarity. If you're a homeowner or an investor, you need to move out of wishful thinking and into real strategy. Here's your playbook. Renew strategically. Consider short-term fixed to stay flexible. Consolidate high-interest rate debt. Wipe out that 21% visa. Downsize or monetize space. If you got a basement suite, use it as a buffer. Explore reverse mortgages, especially if you're over 55 sitting on equity. Start budgeting for 2026 rates, not 2021 nostalgia. Hope is not a mortgage strategy. Neither is denial. The age of free money is over. The era of just wait it out is gone. Now's the time for action. Smart planning, tactical decisions, and hard conversations. If you want to survive the next 12 to 18 months with your home, credit score, and peace of mind intact, you need a guide. You need someone who knows how to read the data and fight for your bottom line. That's what we do at OwlMortgage.ca. If this video hit home, Like, subscribe, share it with someone who's in denial, and drop a comment. Do you think rates will drop in 2025, or are we stuck until 2026? And if you're staring down a renewal, drowning in payments, or wondering what move to make next, OwlMortgage.ca is here. Let's talk strategy. I'm Vince Gaetano, and this is your rate reality check. See you next time.